Hey there, everybody. It's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. And once again, happy Friday, everybody. Hope you guys are doing fantastic. Well, rates finished the week, thankfully, slightly better than where they ended last week. Now, we've just been under some pressure here for the last, 4 or 5 weeks here with interest rates. And we were getting very, very close to breaching a very important technical level, the 200-day moving average. And if we did breach that, that would have been a pretty bad sign. But luckily, we just touched right up against it, and now interest rates are improving a little bit based upon that. And that's in spite of the stock market continuing to just set record levels and maintain very, very high levels, and in the face of inflationary data that appeared this week. So the bottom line is that looks like we did find some support here finally. Hopefully we will continue to maintain at least these levels and set up maybe for interest rates to improve at some time in the future here. But we didn't breach these levels, so at least we're stopping the slide. Now, in terms of economic data that was released into the market, we did see the producer price index come in. That measures inflation at the wholesale level. That showed that the PPI on the year-over-year number increased from 2.4% to 2.6%, and that was the largest increase in about 5.5 years. So that is inflationary. Again, that's typically bad for interest rates, but the good news is interest rates didn't deteriorate based upon that news. Today we did see the consumer price index come in, and that also showed an increase, not as large. We did see the CPI come in showing an increase on the year-over-year number from 1.9 on the headline number to about 2.2. But when we factor out the energy, so we're looking at just the core PPI, that didn't show an increase. That remained at a level of about 1.7. So the market did react favorably to that. But the bottom line is that we are seeing, some maybe inflationary pressures. I told you last week after the unemployment report, we did see some wage-based inflation. So there's inflation concerns. We also did see the Fed minutes released, and most Fed members do believe that the conditions do warrant an increase to the Fed funds and discount rate on the December meeting. Bottom line, though, is that we didn't breach that 200-day moving average. Rates improved a little bit here, so hopefully we can hold these levels. Even if we do see a Federal Reserve increase to the short-term rates in December, that doesn't necessarily mean that's a bad thing for long-term interest rates. It's just really, are we going to continue to see some of this inflation data that shows that there is inflation, and that's going to be the biggest danger. In fact, if we do not see a dramatic increase to inflation and a Federal Reserve tightening, that could actually help interest rates for the long term and kind of maybe set up some positive movement for 2018. We'll keep you informed as to what's going on. If you have any questions, please feel free to give us a call. But interest rates did hold their levels. We are showing some support here, and that's a positive thing. So if you have any customers that need any help this weekend, please give us a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.